There's one trading belief that can keep you losing money for years. And the scary part? It sounds completely logical. You hear it everywhere. If you become good enough at analyzing the market, you can predict what happens next. So, you study more. You learn more indicators. You watch more charts. You search for better entries. You look for the perfect strategy. But there's a problem. The market doesn't owe you certainty. And believing that it does may be one of the biggest reasons beginners struggle. Today, we're exposing the biggest trading lie most beginners believe. And understanding it could completely change the way you trade. The lie. The lie is this. A great trader is someone who can predict the market. It sounds reasonable. After all, wouldn't the best trader know where price is going? But think about it. If prediction were the key, the trader with the most indicators would win. The trader with the most information would win. The trader who watched the market the longest would win. But that's not what happens. You can have an incredible analysis and still lose the trade. You can make a terrible prediction and still make money. That's because trading isn't about being right every time. It's about managing uncertainty. Why beginners get trapped? When beginners lose a trade, they usually ask, "What did I miss?" So they search for another clue. Maybe the RSI wasn't enough. Maybe they need volume. Maybe they need another moving average. Maybe they need a different candlestick pattern. Before long, their chart looks like a cockpit, but their results haven't changed. Why? Because they're trying to solve an emotional problem with more information. They think, if I know more, I'll feel certain. But more information doesn't eliminate uncertainty. Sometimes, it simply gives you more reasons to doubt yourself. The moment, everything changes. The turning point comes when you understand one simple idea. You don't need to know what happens next. Read that again. You don't need to know. You need a plan for either outcome. If price goes up, you know what you'll do. If price goes down, you know what you'll do. If the setup fails, you accept the loss. If it works, you manage the trade according to your rules. Suddenly, the goal isn't prediction anymore. It's preparation. And that's a completely different game. The professional mindset. Professional traders aren't sitting in front of a screen thinking, I know exactly what the next candle will do. They're thinking, if this happens, I'll do this. If that happens, I'll do that. They build decisions around probabilities. That's a major psychological shift. Instead of demanding certainty, they accept uncertainty. Instead of asking, will this trade win? They ask, is this trade worth taking based on my edge and risk? That's how you stop gambling on predictions and start operating from a process. The dangerous side of being right. Here's something beginners don't expect. Being right can actually be dangerous. Imagine you correctly predict 5 trades in a row. You start believing you figured the market out. Confidence rises. You increase your position. You take a setup that doesn't quite meet your rules. Then the market gives you a reality check. One loss becomes much larger than it should have been. This is how prediction creates ego. And ego creates risk. A trader who needs to be right will eventually refuse to accept being wrong. And the market is extremely good at punishing that behavior. What you should measure instead. So if prediction isn't the goal, what should you measure? Your execution. After every trade, ask, did I follow my setup? Did I respect my risk? Did I follow my exit rules? Did I allow emotion to change my decision? That's your scorecard, not whether the trade made money. Because here's the uncomfortable truth. A good trade can lose money, and a bad trade can make money. The outcome alone doesn't tell you whether you made a good decision. Your process does. The real edge. The real edge isn't knowing exactly what the market will do. It's knowing what you will do when the market does something unexpected. That's why discipline is so powerful. When the market moves against you, you don't panic. When it moves in your favor, you don't become reckless. When there's no setup, you don't force one. You simply execute your plan. Trading psychology author Mark Douglas emphasized this probabilistic approach. Successful traders don't need certainty from individual trades. They focus on consistently executing their edge. That mindset removes enormous pressure. Closing. The biggest trading lie most beginners believe is that becoming a better trader means becoming better at predicting the future. It doesn't. You don't need to predict every move. You don't need to win every trade. You don't even need to know what's going to happen next. You need an edge. You need controlled risk. And most importantly, you need the discipline to follow your process when the outcome is uncertain. Because the best traders aren't the ones who always know what's coming. They're the ones who are prepared, no matter what comes next. Subscribe to Mind Over Markets, because the market isn't asking you to predict the future. It's asking you to manage yourself.